I would expect 290,000 this year.
Okay.
You see what I'm saying? That would be like, now if we don't quite peak this year, if we continue on into next year, then I think the peak is going to be even higher. Right? Right. So, and it could even be, if you scroll down, that's sort of my base case. I think there's, you could even go even crazier, right? Like, so we could go up to 500,000 this year, this year, even this year, even the next 6 months. Not unheard of, right? Not statistically, it makes sense, right? It still could make sense. I do think if we get a extended cycle into 2026 or even beyond, right, we could see much higher prices, even 500, 600, 700,000. I don't think we're going to hit 1 million, without a major correction in between. But I do think we could get significantly higher than where we are now. I do think we're not immune from bear markets. I think we will have another really nasty bear market. I just don't think we're having it now. I don't think it's happening in the next 12 months, honestly.
In a market often defined by chaotic price swings and emotional reactions, data scientist Fred Krueger presents a compellingly serene and mathematical framework. He argues that Bitcoin's adoption and price are not random, but are in fact following a predictable power law distribution. His core analytical insight is that when you view Bitcoin's price chart in log-log space, the gut-wrenching volatility that defines the narrative effectively disappears. What remains is a remarkably stable, predictable trend line that has held true since 2010. This quantitative lens transforms our understanding of the asset, moving it from a speculative gamble to a measurable long-term growth trajectory with mathematically defined peaks and troughs.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
There are 12 million people right now who have more than 1 million, 12 million addresses on chain that have more than 1 million sats. 12 million. That's the number. That's from Glassnode, not debatable. That's the chain on-chain data. Okay. There's about 100 million people who have Bitcoin, period, on chain. But these numbers are growing exactly like this power law, right? So, and it's really interesting that Bitcoin price is also, let me find you the one. So this is just the Bitcoin price now, right? And I've taken the Bitcoin price since the Genesis block, since October of 2010, when it really started trading, that we can really get the prices correctly. As you can see, the red line is the trend line. Again, it's a line, We have all this volatility in Bitcoin, but in log space, it's not really that volatile. Do you see what I'm saying? It's just, we don't tend to look at things in log space. When Bitcoin goes down 70%, we're like, oh my God, the world's ending.
Yeah.
But in log space, it's not ending at all, right? We're just cruising. And what I drew is a yellow line, arbitrarily just shifted that thing by 0.6 in log space, okay? Which basically says I'm about to go, it's like a quadruple of the trend line. So basically, is the log 10 to the power 0.6 is equal to 4, right? So if I quadruple the trend line, that's really where the peaks tend to be. Right? If I half the trend line, that's kind of that tends to be where the floor is, right? So in all prior cycles, we kind of quadrupled the trend line, right? So if we quadruple the trend line and we peak at the end of this year, and it's a contingent on and we peak in the end of this year, not continue going on here.
We'll get into that,
right? I would expect 290,000 this year.
Okay.
You see what I'm saying? That would be like, now if we don't quite peak this year, if we continue on into next year, then I think the peak is going to be even higher, right? Right. So, and it could even be, if you scroll down, that's sort of my base case. I think there's, you could even go even crazier, right? Like, so we could go up to 500,000 this year, this year, even this year, even the next 6 months. not unheard of, right? Not statistically, it makes sense, right? It still could make sense. I do think if we get a extended cycle into 2026 or even beyond, right, we could see much higher prices, even 500, 600, 700,000. I don't think we're going to hit 1 million, without a major correction in between. But I do think we could get significantly higher than where we are now, very significantly higher. So, I absolutely not a seller of Bitcoin at these prices. I do think as you kind of get to the, above 200, if you did want to sort of trade around the edges, that's the price where you could start peeling a little bit off, right?
Okay.
And then as you get to 300,000, you peel more off, right? And you can do this with this thing called the Kelly criterion, which is just saying rebalancing at a certain percentage of your portfolio. So like if you say, okay, I want to be 70% of my portfolio in Bitcoin, right? Now Bitcoin goes up, you're now at 80%. You say, okay, I'll rebalance down to 70%, And if you do the rebalancing periodically over time, like, 1 year, that's a pretty sound technique mathematically. There's all kinds of reasons why that's good. And then when Bitcoin drops, at the next bear market, you will buy it lower, and you can buy it lower, buying it up to 70% again, of your portfolio. I do think we're not immune from bear markets. I think we will have another really nasty bear market. I just don't think we're having it now, I don't think it's happening in the next 12 months, honestly, I think we're going to have a very good, very positive 2025 and a very positive 2026, I think.
The centerpiece of Krueger's analysis is the direct application of this power law model to forecast the current cycle's peak. By observing that all prior cycle tops have occurred when the price quadruples its long-term log-log trend line, he arrives at a stunningly precise, data-driven conclusion. If this cycle peaks by the end of this year, the model targets a price of approximately $290,000 per Bitcoin. He even outlines a more bullish scenario where an extended cycle into 2026 could see prices reach as high as $500,000 to $700,000. This is not based on hype or narrative, but on a consistent mathematical pattern that has governed Bitcoin's entire history, providing a powerful quantitative anchor for investors.
At the end of 2025, to say, okay, I'm going to pick a number at what should Fred be involved? What would be a good maximum number to be involved in? And Kelly suggests a number, by the way. It suggests 70%. That's kind of the number it would mathematically suggest. There's a whole bunch of math around this, and there's all kinds of properties of this, right? So it's not just pulled, there's a reason for this, right? And it could be, right now the number is 75%, 75%. That's kind of based on the returns of Bitcoin. That's what the Kelly formula tells you that it should be, right? So I'm going to look at the end of 2025, and if I have more than 75% of my net worth in Bitcoin, right? Which I kind of have now. So unless if Bitcoin goes up, I'm going to definitely have more than 75% of my net worth in Bitcoin, right? Of my liquid net worth in Bitcoin, right? So I will then recalibrate just down to 75. And then I will wait until the end of 2026. And then I will recalibrate in the end of 2026 to Bitcoin. Like great traders, the great investors do not trade a lot. Warren Buffett does not trade a lot. He hates Bitcoin, but he is the greatest investor of all times. And he didn't get there by trading a lot. He got there by holding Geico and the Washington Post and, these things forever and writing them up.
Yeah.
So I don't think that there's a lot of reason to trade a lot. So I think, having a rule that, you wait until a year from now and then you see where you are and, and these, if we do start dipping, right, probably going to last a year. That's the other thing, right? So you don't need to be in too much of a hurry to catch the dip. in my opinion.
Right.
So again, this is the way I'm looking at. I'm much more looking a little bit because I'm a little older, but also I'm much more of an asset allocator right now than I am a trader. So I'm looking at this saying, okay, yeah, I mean, if I have 70% and the market's dropping, I'm fine. I'm okay. I want to hold it 70%. I don't want to be like Arthur Hayes and just go to shorting Bitcoin. I'm not interested in that, right?
No.
I want to resist absolutely the urge to try to predict the market on the way down. I don't want to do that. Because the power law tells me that it's getting to 1 million. So if I really believe it's getting to 1 million, I could just hodl right through it. On the other hand, psychologically, that's really tough. And taking some off at the top could look, I didn't have too much trouble holding my Bitcoin during the 22 debacle.
Yeah,
It didn't really phase me that much. I think this one will probably be, the next one will probably be less than that. So, I have such conviction in the asset right now that, I don't understand people. Well, I do understand them, but I think that people who trade Bitcoin a lot, they need to study Bitcoin more, Yeah. I just think that that's the thing. Some of these other things, you don't have that same kind of, some of these other things could just get wrecked.
Ultimately, Krueger's power law framework informs a disciplined, long-term asset allocation strategy. He advocates using a mathematical tool known as the Kelly criterion, which, based on Bitcoin's historical returns, suggests an optimal portfolio allocation of around 75%. His approach is not to trade the swings, but to periodically rebalance based on these long-term targets, arguing that the greatest investors, like Warren Buffett, achieve success through holding, not frequent trading. While he fully expects another nasty bear market in the future, his conviction in the power law's ultimate trajectory to $1 million provides the confidence to hold through volatility. His message is clear: if you are trading Bitcoin frequently, you need to study it more.